Hi guys, so I've had a few questions on Instagram about sort of what I wish I had known when I was starting out as an investor, as a beginner investor. And you know, I still don't qualify myself as an expert of any sort. I'm still learning, but I have been doing it for a few years now, so I suppose I'm no longer like a total beginner. And I figured that if there are people asking me on Instagram, that actually a video might help more than one person. So essentially, I'm going to talk you through sort of what I wish I had known when I was starting out. So almost like a regrets of my investment journey sort of thing. Just things that I wish I had thought about, wish I had known. And you know, hindsight is beautiful, but hopefully this will help some of you. As you know me, I'm not a fan of big intros, so let's kick off. So the thing I want to mention first is actually, if you are thinking of starting out, one of the things I regret the most is not starting to invest earlier. I've spoken about this before, and I guess this isn't really qualifying for what I wish I had known starting out as a beginner investor. However, it's something that's worth mentioning because if you are watching this, then the likelihood is that either you haven't started yet or you are just wanting to start. And honestly, the main thing is that the earlier you start, the better. And you know, you don't have to be picking individual stocks. You can invest with robo-advisors or ETFs or things like that, so don't be too scared. Obviously remember things like don't invest money that you'll need in the short term, but yeah, just remember that. So the first thing I want to talk about is not properly planning my portfolio out at the start. So I think at the beginning you are so excited about starting and investing in companies, it's easy not to think through, and I sort of had an idea in my head of what I wanted it to look like, but I didn't really sit through and plan it. I didn't think, okay, I'm definitely going to have 60% in ETFs and 10% in crypto and the rest in individual stocks or anything like that. Like, it was in my head, but I didn't sit down and plan it. I didn't think, okay, that means that for every X amount of money that I invest every month, this is what I need to buy. And this is what my portfolio is going to be made up of. I didn't do that. I just sort of invested as I went along, which, you know, it's fine. It's not really a mistake per se. So, you know, this isn't a video about mistakes I made necessarily. It's just things that I wish I had known. So perhaps I would have done better when I started. So honestly, properly planning the balance of your portfolio and trying to stick to it is really good. I'm finding it really difficult now to try and balance it. And, you know, I have been selling a lot if you've been following my journey, and I'm selling not because of the current situation, it's more because I'm building a house. And it pains me to sell stuff, and I'm still only selling stuff that's at a profit. I've not sold anything at a loss. But yeah, this is the time to buy, not to sell. But anyhow, if you are starting out, it might be good to consider from the beginning having a balance of your portfolio. Okay, so the next thing that I wish I had known when I was starting out investing is that I wish I had more of a clear goal to my investments, because I was a little bit all over the place. And whilst I sort of had it in my head that I wanted to be a dividend investor, I was still investing in things like ETFs and growth stocks and things like that. And all the hype things. So I didn't really clarify my goals and stick to them. And again, similar to the previous one, it's not necessarily a mistake. Like, you can still go about investing that way. But now I regret not really having that clear path. So again, sort of having a bit of a plan of, you know, maybe 80% of my investments being in dividend paying stocks and then 20 being in more growth stocks, something like that, because I sort of got muddled by all the advice and comments and videos that I was watching, and it started, you know, making growth stocks look really appealing and going, oh, you know, because of your age, it should be growth stocks and things like that. And I wish I had stuck with my guns of sort of, it's going to be dividend stocks and that's it. So that's one thing. If you have a clear goal, you know, by all means change it if you want to, but always be clear about what your goal for investing is and try to stick to it. Okay, so the next thing I wanted to talk about is crypto. So there are two things I want to mention when it comes to crypto, two separate points. Now, the first one is actually that I wish I had invested more when I was starting out, and I wish I hadn't been scared of crypto. Now, make sure you listen to the second point before you take anything from this video. But just on that first point, I do think that crypto isn't as scary as the media will have you believe, and especially with the safer crypto investments. So obviously none of it is 100% safe. It's not the same as, investing in index funds, for example. Of course, you have to remember that. But, with the likes of Bitcoin and Ethereum, the big players, it's not as risky as investing in small coins. So I do wish I hadn't waited so long to dip my toe in the crypto pool, if you will, because I wish I'd done more research and more thinking, and I wasn't so against it at the start. Now, having said that, another thing when it comes to crypto that I wish I had known was to trust my gut a little bit more. And where I say, the big players are safer, there are ways in crypto where you can lose a lot of money. And I did. I lost over £2,000 in a scheme that seemed too good to be true. And don't get me wrong, when I invested in that, I went into that investment thinking I'm probably going to lose this money. And I was okay with that. It wasn't money where I was blindly thinking, oh my God, I'm going to be a millionaire, put in this money that I have set aside for something else. Obviously now I wish I hadn't because of the house build and the way it's turned out. But this was before that. But essentially, I heard about this scheme and it seemed amazing, and my gut was telling me this is too good to be true. But then, you read about all these things and how people become millionaires off of this stuff, and I was like, okay, well, what's £2,000 in the grand scheme of things? Okay, yes, if it doesn't work, I lose £2,000, which is not a small amount of money. But, I got really lucky with this channel and with the money that I made. It's still bizarre for me to think about. Obviously, I don't make as much anymore, but, at the time I did make a lot. So I was thinking in my head, okay, 2,000, it's not going to break me if I lose it, but if this works out, I will make a lot of money. So I invested in it, but obviously I wish I had trusted my gut a little bit more. And I think from speaking to people, sometimes it's easy to get sucked in and wrapped up in the sort of hype of things. So yeah, I just wish I had known to trust my gut a little bit more. Basically, if it seems too good to be true, it probably is. I do feel like I've said that on my channel before. Talking about hype and falling into hype things, another thing that I think I wish I had known previously is that penny stocks are probably just not worth it at the beginning of your journey. I do think there is a place for penny stocks, and I think that they should be utilized, but I think that they should be utilized later down the line in your journey, because if you invest in them too early on, they can put you off. And usually, more often than not, there is a reason that these stocks are penny stocks, and you are hoping and expecting based on hype that these investments will pan out massively. And I've invested in quite a few penny stocks, and I can tell you now, pretty much all of them, I think actually all of them, are down 80 to 90%. One of them is down even more than 90%. And it's fine. Again, I never invested a lot, and I always sort of went into it thinking this is a more risky investment. But I do think it's still, even when you're prepared for it, it's really hard seeing those investments tank 80, 90%. And I think the most important part of penny stocks is to remember that quite often there will be people who invest in them, then create a hype online. Lots of people buy it up thinking, oh my God, this is the next big thing. And then they sell all their shares because the shares have gone up, they've made a huge profit, and they've completely tanked the stock. So you're then left with a stock that's back to its original pre-hype value that probably will never come out of that. So yeah, I think treat penny stocks like gambling and you'll be fine, but don't really treat them as investments. Okay, the next thing I wanted to talk about quickly is waiting for unlikely rebounds. So I think a lot of us fall into this trap, but quite often, so I'm still in this trap, don't get me wrong, but I do wish I wasn't, and I do wish I hadn't fallen into that trap so quickly. And it's basically where you have a stock and it just tanks, essentially, and you keep thinking, oh, it'll go back up, and then it's not going back up. And then you start losing more and more, and then you're like, okay, well, if I realize this now, I'm realizing an even bigger loss. So it becomes this vicious circle, and I'm in this dance now with AT&T. But yeah, I wish I hadn't really fallen into that. I wish I had just gone, okay, unlikely to recover. Let's just sell, take the hit, and put it into something that I believe will do better. But I never did that, and I think it's important to think about. Obviously, you shouldn't be constantly, trading. You shouldn't be constantly buying, selling. At least that's not what I try to promote on my channel. I'm not one of the investors or YouTubers that talks about constant, buying, selling, and not even day trading, but just more trading in the sense of more active investing. For me, it's more just put money and leave it. But I think there's still a place for selling and buying when something is doing really badly. Finally, I do wish that I had appreciated the value of an ISA a little bit more. Now, I did have my reasons for using so many investment platforms, and I'm still going to continue doing that. I 100% believe in my philosophy of having multiple investment accounts, and the fact that different brokers have different things to offer. And whilst I've reduced the amount of brokers that I use, I'm still never going to be the person that only uses one. Having said that, I've never really focused as much on mostly funding my ISA and then only playing with other accounts during that year. And now they are cutting the dividend allowance and the capital gains and everything like that. So whilst I was aware of the ISA benefits, I just didn't really consider the impact that it would be as great. And as soon as this coming April. So yeah, it's something that I wish I had thought about a little bit more in terms of protecting more of my money in an ISA, because I've always had an ISA and I've always funded them, but I've never focused enough on, okay, maybe the majority should go in here, if that makes any sense. Okay, so those are my main things that I wish I had known when I was starting out. Let me know if there's anything that I've forgotten or didn't think of, or anything that you wish you had known when you were starting out. So help other beginner investors out by leaving that in the comments. And as always, thank you so much for watching, and I'll see you in the next video. Bye.